Hey everybody, welcome back to another video. In today's video, it's our special edition. We look at the markets for the week ahead, including the stock markets, crypto markets, and commodities markets, and discuss all of the key levels that you should be looking at right now. We've also got Cathie Wood coming out and saying that innovation stocks are in deep value territory. I'm not sure if I'd go as far as to say deep value, but they definitely are setting up for some nice potential into 2022. Everybody isn't looking at them. It's the most hated sector of 2021, and we'll be taking a look at that and more in today's video. Stay tuned, guys. Plenty to discuss. See you soon. Alright guys, well let's get started in this video by quickly discussing some of the big market movements that were going on last week in the stock market. Then we'll get into our crypto and commodities discussion a little later. So let's talk about Microsoft, Apple, Google, and Netflix. All these FANG stocks, Tesla included, were moving down, and all the technology pretty much across the board was having a bit of a cooler. Now, I believe a lot of this is sector rotation. We've seen such strength out of these technology sectors in the last couple of weeks that it's time for them to come back down and for people to move into others. Characteristically, December actually tends to be relatively weak for a lot of these stocks, while things like healthcare tend to do quite well, utilities, real estate, these other stock sectors have better times. And we have seen that really flowing through into the markets. For the Friday trade, what was going on? Well, it was pretty much just a movement up early after the first hour of retail trade. Then we went sideways for the rest of the session. But look at the uncharacteristic moves. We had the Dow Jones actually down 1.48%. And at the same time, the IWM Russell 2000 was up 0.92%. The smaller caps came back. And I think this is a little bit of the starting of rotation, possibly into funds like Cathie Wood was talking about. A lot of her sectors, a lot of her innovation companies have been brutalized in 2021. She'd have to be going down as one of the worst performing markets or worst performing actual managers for 2021, which is pretty surprising considering the 2020 stellar outcome. But this is where stock market traders, stock market people get interested, because once we start to see a little bit of a turnaround in that particular sector or that innovation area, could 2022 bring on one of the bigger years for her fund and for her returns? We'll look at that a little bit later. Another one that's coming out is IBB. Biotech. Look at this. Biotech actually ended the week the best. Now, I can tell you biotech was sitting at around a 2% gain for 2021. Now, all of a sudden, in literally 1 week, it's put on 4.9%. So is this a movement round in biotech? Some of the smaller biotechs starting to find bases, some great technicals happening there. And while everyone's freaking out about the market, there's actually some really good stuff that's happening and starting to occur in these stocks and in these sectors. Healthcare also coming out 2.48%. Gold finally showing some signs of life, 2.1%. And the end of the week actually spelled doom and gloom for all of some of the most popular sectors of 2021. Energy, the top performing sector of 2021. Consumer discretionary, horrible in December, continues to be horrible in December. XLK, semiconductors, both down 3 to 4% for the week. It's amazing how many things are happening right now in the markets, and we will cover as much as we can throughout this time. Now, a lot of people don't believe Santa is coming to town. We've all been naughty this year, it seems like, and the market is highly volatile. But realistically, the biggest stat that people use when it comes to the Santa Claus rally is actually when he comes to town. So, of course, around Christmas to the New Year and the first couple of days of trade. And that's where you get this predominantly positive stat coming out of the Santa Claus rally. Will it come this year? Time will tell. We've seen some stabilization even on the Friday quadruple witching hour event, which is when all the options expire at once. We held some key supports that we'll be looking at later. And while the VIX here has spiked up 21.58, it is quite a lot higher. I would have it at a guess, and I think a lot of people are looking at it, that this may drop off. So the VIX is struggling here at around this 2250. We've obviously got this support flowing around the 18.36, and we know where the VIX likes to go. Eventually, while the VIX spikes, it eventually does come back down, and 15 has been one of our big targets. So will fear jump out of the market this week, and will we start to see some normality coming back in? Will Santa Claus come to town? I hope so. I would like to know whether you guys in the comments think he's coming or not, or whether you just think December was the worst month ever already and you're done with it. Let us know what your comments are in the comments down below. Let's move over to gold. So while the VIX is spiking a little bit, we have seen some strength out of gold. So gold did pretty much what we thought it would. It moved from that 1793 breakout. It went straight up to the 1810, failed to breach the 1810, and then sold straight back off. And not everything is bad here for gold. This has been some good days of strength. Gold and silver finally coming back into some interest. But I will say the daily looks a little nasty. So we reject that 1810 area. This is the first, second, third, and fourth time it's kind of come up. And many people will know this is a pin bar or a shooting star style candle, a technical weakness candle. So if gold is able to breach past this candle now and close above it, that's going to be a huge deal. Do you know how many stop losses are going to be taken out at that zone? I can imagine you would know that a lot of people will have shorts in and they'll be trying to sell gold off in the coming week. Now, if it doesn't happen and it has no follow through, then it's going to be potentially a very nice trade should we get through that top resistance over here and close above on the daily. Just be careful trying to sell this right now. The biggest issues with it are multiple moving averages. We've got the blue line, the 50 exponential moving average, the red line, the 20 exponential moving average, and the 200 simple moving average, all sitting on the exact same level at the exact same point. That's a little scary, guys. That means that this will act as probably dynamic support. And there's also a trend line around the back, plenty of other role reversal areas, just like we mentioned, the 1793. It's going to be actually tough for the bears to push it right back down. But do watch that 1810 plus close because it's going to be significant. And we've talked about the next stop for gold is all the way up there into that 1870, 1830 into 1870. Some big levels that could happen here on this one. Silver was very similar. It reversed from our 2260 zone. This is exactly where we expected the resistance to be. Resistance, 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 smack bang into that level, and then it started selling off. Interesting. Certainly one of those things that we want to be paying attention to. And I think with silver and gold, again, if they breach these top zones, there's going to be a lot of follow through for those. We'll move over to US oil, and then we'll start with our stock discussion. And this one here just continues to consolidate. I mean, basically, we've missed this level a few times. 73, we know, is a huge resistance. It's bounced off this zone, which is 69.50-ish, and it's found support. It's then breached our downward trend. So let's have a look at the downward trend here, showing us the first signs of recovery and closed right on the test of that level. So for oil traders here, black gold traders, they're looking literally towards that 73. This is where we want to see strength on the Monday session, at least no worse than 69.40, and some kind of buying. Little lightning bolts on smaller time frames will be what people look for, and 73 is fast becoming one of the most important zones to be watching on the market because we've now got 4 rejections, actually 5 rejections off this area. Should we close above it? What do we all think is going to happen? Participation. That's where you'll think algorithms are going to come into oil. I saw Goldman Sachs, they're now claiming $100 oil, which is a little bit early for them, actually. Usually they only do that when it gets in the 80s or 90s. But they're now starting to come out with $100 oil possible in 2022. I'm not sure if $100 is going to happen, but certainly past 73, it will be a big deal to the markets. Continue to watch that zone. A lot of people box this type of stuff up. So what we do is we create a rectangle, put it there, and then look for a breach of that area if possible. Let's move over to Tesla. So Tesla here going back down. It went as low during the day as I think around $909 and then bounced off that area. That's very close to the role reversal zone of the previous resistance. Tesla's still looking weak, but it is coming down to a very big buy zone. I'm sure many of you were looking at this with interest. So the bears got control of this stock. This is almost a carbon copy of last time. Like when you think about it, it's on a grander scale, but it's very, very similar. Huge rally, sideways action, breached low, and it came down, then bounced, and then of course took a while to get ready again. What do we see this time? Huge rally, sideways action, breached low. Will it go further? We don't know that one. This is certainly a big buy zone for a lot of people. And then the next zone that a lot of people will be interested in is going to be this massive trend line that we saw hold up for quite some time. So this trend line here held up through about 4 holds. So we'll just get that right. There it is. And that went through these previous ones, these previous supports, And that's going to be somewhere around that 8 kind of 50 if it keeps coming down. So there's a lot of buying pressure that could come back into Tesla. And we need to remember, this is now down from top to bottom around 25% discount. So pretty big deal on how much it already moved. You're getting the discount now from the 22nd of October almost to this point. Not too bad for Tesla fans that they're looking to invest and find better price levels. Around that 900, certainly a very interesting point. And we know that Tesla's earnings now is around 46 days away, I believe. Let's move over to Apple. Now, this is where things get a little bit disconcerting with the FANG stocks and the bigger tech stocks. Apple is certainly weakening. No matter which chart you look at here, it's starting to look, well, it pretty much is double topping. Now, I don't like to short these kinds of stocks that much. I know traders will look to short it, and that's fine and everything, but I don't really think that is best for everybody, because as we know, markets are geared towards the upside, especially quality stocks. Now, if you're in a bit of a crappy stock and it's moving down and you see a clear movement, a very clear technical, that's a good thing. But when you try to short a quality stock, it can be quite tough, and you've got to be nimble, you've got to be fast, and you've got to know what you're doing. It's not for the uninitiated, that's for sure. I'm sure a few of you will have some stories about trying to short stocks and getting belted doing so. If you do, help the community, post them in the comments down below. Don't worry, there's no bad stories. We've all lost shorting before. I have too. And it's one of those things where if you do it, you've got to be fast. You've got to really know what you're doing. It's a much harder trade. So it's moved through the 4-hour 20 moving average. It's sold underneath. And for a lot of people, they'll be looking at this on something like a 1-hour or 2-hour chart and saying, okay, double tops in. Look at this little bit of rejection here. We've got a long leg doji. We've got a rejection candle, and they may have even shorted it into the close here for Apple. Does Apple need to return? Well, I've argued on the previous video that it's overpriced on fundamentals. And I'm not saying it's overpriced by a little bit. It's overpriced to almost a point, which is an all-time high overpricement for Apple, similar to what we saw in the end of 2020, the start of 2021. And guess what happened during that period? The end of 2020 to the start of 21, it basically went sideways for a while. It didn't have this big ramp out. So this could be a fake out to trap a lot of retail. I feel like Apple could come all the way back down here to the 20 moving average on the weekly. It doesn't mean it is going there. Apple's still a quality stock, but it's starting to show its signs of double topping. And I think when you come into something like a 2-hour or 1 hour, what most people will be doing is they'll take the distance of this movement here, they'll extrapolate that out, and they'll be saying, okay, I'm going to look for Apple down to this 162, 163 zone for the short, and then possibly try to rebuy it around that area. Maybe we've got some moving average with it. Maybe they're looking for the daily 20. Maybe they're looking for the weekly 20. There's a lot of different ways to play this stock, but it is weakening. You can tell that on this chart. Semiconductors also stuck in sideways action. Nvidia almost looks the exact same way as this. This week will be interesting for semiconductors. I thought it might have closed or bounced a little bit harder off this zone. The daily 50 exponential moving average here. This is the entire semiconductor sector. And you'll notice that it's just gone support, 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 support. Little bit of a rally through the Friday session and then sold straight off. If it gets underneath the 50 exponential moving average, where is the next logical conclusion? Down here at the 275. That will make a lot of Nvidia people excited because they might get a good price on it, but it's still on support. So what you want to do, what you need to be doing for things like the week ahead is saying, okay, how do we break down this chart? Is there any trigger levels that we need to look at? Do we see some idea of maybe strength through like 300 here, or a double bottoming pattern on the smaller time frames to show us accumulation again through the 300 might be a key level? This is the type of thing that you need to do. Where is the buying support? If there is buying support, how do we recognize it? That's something you want to be bringing into your systems. We're just showing you some of the key levels from a support and, of course, a supply-demand area. There is a lot of buyers here, but if those buyers are weakened and it closes below, that's when we start to see those algorithms getting control of the market and move it down. Let's move over to the ARK fund. So we saw Cathie Wood say deep value. Now that could be partially, I'm trying to save my own fund here and get some value back into it and get people to move it around. But I do think that this is becoming a narrative. And that narrative is that even though Tesla, remember, Tesla is a huge part of ARKK. Even though it's moving up, it's done very, very well this year. what hasn't happened is the fund has incredibly underperformed. So that means that almost all of her other stocks are not doing well. And you can tell, I think it's only like 4 or something of the stocks that have done that well in the ARKK fund. So all of her beliefs have gotten cheaper. And I think that that is a big thing. When we think about it, the innovation stocks were out of control at the beginning. I mean, you can't have this type of gain without having a nice pullback. But look at the pullback now. Where's the pullback come to? 50% fib to almost the 61.8 fib. So almost the golden ratio, but a 50% fib of the entire movement up. And it's consolidated now for an entire year. So 2022 could literally be the year where some of these stocks solidify themselves and start to buy up. And you'll notice the weekly, there's been an increase in volume recently, and there's been quite a lot of buying off this base. There's been a lot of transactions going through on the fund, which is uncharacteristic because look, for a long time, there was very little transactions. So where will Cathie Wood's fund start to look good? Well, I think it's already looking better than it certainly has from a technical standpoint. Supports have been found. Monthly S2 has been found. We know that this 103 is now a resistance, so we could be double bottoming and then, of course, movement up after that. But there's probably double bottoms within double bottoms. So even on the Friday close, take a look at this. Support found, closes at resistance. An important week for this fund and an important year coming up to solidify whether Cathie Wood is right or in some ways she may be wrong in terms of 2 years in a row of underperformance to the market indices. I tend to believe that it may be doing better, and I think 2022 will be a good year. But overall, look at this. You can see the support base, you can see the resistance, and you've got a second resistance afterwards. It almost looks like IWM, which we'll be taking a look at in just a moment. Speaking of IWM, let's move over to it. Remember I said it looked the same? Here's the double bottom potential. Here's the resistance. And just like in that other one, we've almost got a double bottom within a double bottom. So just to zoom out, we know this support is massive. 213, huge level, guys. It has to hold. Take a look at this weekly. I mean, even the weekly just came up. I mean, can you believe it? It literally came up and closed on the 50 exponential moving average, exactly where we said it has to close here to show us some form of buying pressure. The volume is up here in IWM, and when we scroll down into something like the 2-hour timeframes, look at this. The bigger double bottom, obviously base here, resistance, or the top of the intervening troughs here. And then we have another potential double bottom, bam, bam, resistance 220. We breach that. We're going to be breaching moving averages on the higher time frames. We then go slam into this, and then hopefully once we get through 226, IWM should be back in the saddle. That's such important zones. Bears, all they're looking for is underneath this area. They get underneath this area, let's go. The bears start pushing the market. It's a bad sign for the markets. It could show like real weakness across the board. So yeah, some important levels to be looking at here. That's the ones that we have on the charts for the week ahead for IWM. Let's move over now to the Nasdaq. Nasdaq was relatively weak through the Friday close and a lot of chopping and changing. We're getting about a 15,700 reading here on the Nasdaq. The previous, as you would see, resistance becoming support. The previous week of resistance becoming support. It's still all holding above the weekly 20. So I think that's positive for the markets. We know the weekly 20 is a big deal. We're still in our giant ascending channel. So again, it's hard to be a big bear on this market right now. It's hard to be saying, oh, it's looking weak or anything like that. When we scroll down to something like the daily, we have a good support. We go down to something like the 4-hour, and the price action is really choppy. Like this is super choppy for a market index. This is the real market index. And look at the chop. Up, down, all around. No wonder people are starting to have some problems with it. And a lot of this is because it's kind of like a giant channel, and therefore you've got to trade it like that. We want to see buying pressure coming off these lows. When the buying pressure happens and we get nice lightning bolts or double bottoms on the smaller time frames or whatever, it becomes easier to trade. But I'll put on the QQQ for you guys in the US. It's the exact same thing. As you can see here, it's just finding support, but nothing too amazing. This week, we hope this holds. You hope it probably breaks through something like this level here, which is the 389 kind of 40. Around this area would be a much stronger kind of market. And to really be solidifying the bull trend, you've got to get above 400. We all know that 400 is the key zone. I'm going to go with it again, and I've said this plenty of times. The best market index to watch this week and to watch in the last couple of weeks has been the S&P 500. And the reason why is it looks way better on the charts. This is always the one that gives us the strongest signals, and it's usually the better one to look at. Resistances across the board, this 4712, we haven't seen a daily close above there. Daily close above here solidifies the bulls. Absolutely looking fantastic. We've got a daily 50, and we keep bouncing off the 4600. So we know there's been a lot of options sitting around that level. We've also got some buying wicks that we've got going on here. So if we bring this down, we had a nice buy twice now where it's basically gone back to this 4660 area. It's sold off that level. It's bought, it eventually scrolled through, and look at this, a nice bullish style candle here. Should the Monday session get through this zone, you'd think we'd be pushing back up to that 4712 area. There'll be some day traders in there. And a lot of people will even be dialing into the smaller time frames, 15-minute charts, 1 hour charts, half an hour charts. They're all going to be open for this week of trade because we've got such a strong level of support at the 4600. If we see lightning bolts, we see double bottoms, or whatever else reason you like to buy off the supports, this is a key zone. If the support is broken, it becomes pretty easy for the bears. They just push it straight back down to 4500. Bam, bam, that's where they're going to be looking at. And if they get under 4,500, well, then we can start talking about the bears being in control. Because at that point, what have you got? You've got a weekly break underneath the 20. And I don't have to explain how important that is. It hasn't happened since the pandemic. If we get underneath that zone, let's watch out. We'll be really coming at you with daily videos because that'll be a pretty important zone for us to be watching out. And certainly an important area. Some good levels here on the S&P 500 for the week ahead. Let's move over to the elephant in the room, Bitcoin. Oh, boring and slow. This market continues to not hold up that well. While it's still holding on to the remnants of the 46,000 and just please like letting it go back up, it just keeps weakening. I mean, if we look at any chart here, nothing on Bitcoin currently looks strong. It needs to snap this real weakness. It's a series of lower highs coming through. Almost looks like, as I've drawn up here, this descending kind of triangle here, and nothing is really looking great. The weekly doesn't look fantastic at this stage, though it's not closed. We have the long leg doji of the previous week, so we need to hold above again the 46 and a half. And if we go into something like an 8-hour chart, one of our favorite charts to look at, you really can see this more defined weakness. So we have resistance, resistance, resistance. If we rally, could that sell off again? That would be bad for the market. It really is all about breach this, show us the first signs of recovery, move up to the 52, which is the next big point of resistance. And if we get through there, that's where the bulls come back in. That's where all the FUD comes out of the market and people feel so much better about the crypto market at this stage, at least how we see it. For the bears, I mean, just need to get underneath these lows. 45 and a half, get a closure underneath there. Here we go to 42 land or possibly even lower. So a lot holds in the balance, you would think, for the Bitcoin and crypto markets. Ethereum's very, very similar. If we go out to an 8-hour, you'll notice just weakness coming across the board. It's a little bit stronger, but we've basically got supports, got a series of lower peaks coming through or lower highs. We need to breach through this, get through that 4160 area, and then that will solidify some at least bullish intentions here in the market. Things will look a lot better. It's really important we get some of these zone breaks. Hopefully we do so over the next week. BTC shorts slightly rising here, showing that some of the whales are moving into short positions. To put it in context, it's still incredibly low. It's nothing notable just yet, not like that last one we had a spike of. So unless this continues to rise, we're not too concerned. And at this stage, it's still quite minimal. Week ahead information, nothing much coming out this week. The markets will be left to really control themselves within the technical boundaries of what they're going to do anyway. So Wall Street will be out in full manipulation. We'll be seeing some key supports and key resistances hopefully tested, and maybe even the beginnings of a Santa Claus rally. Will we get it? I hope so. I hope so for a lot of your sakes, and maybe even crypto. Maybe Santa will come to the crypto market this year, guys. Please subscribe. Remember to give us a thumbs up if you enjoy the videos, and I'm interested to see your comments down below. So of course, let us know what your answers were, and we'll see you in the next one. Bye for now. Have a great weekend. See you soon.